So, quick update on Green Metaverse token. In this video, I'm going to be looking at how GMT has been performing against the USD pair. We're going to see how our prediction from the past couple of videos has been panning out, and we're also going to check out how GMT is performing against Bitcoin. So, let's jump right into today's video. I'm going to start off on the daily time frame because what I do want to highlight is for the past couple of days, we have been ramping up, trending sideways underneath what I said was your last line in the sand. The 786 Fibonacci basically sitting at $1.02. We were basically saying, round it down, call it the psychological level at $1. That was the level to beat. Nonetheless, we've come into the 13 EMA, which has converged into the 786. You can see this 786 was basically your last line in the sand from this low up to this high. There is no more micro price targets. I mean, you can say potentially we could come down for something like a triple top structure, but a triple bottom structure rather. But if you're already a veteran to my channel, you'll probably know that I am bearish on altcoins. I've been calling for these altcoins to go down for a very, very long period in time now, and it seems like we're starting to ramp up to the downside. So if you don't watch all of my videos, maybe you don't watch my Bitcoin videos or my daily news updates, but I covered why we were dumping earlier, and it is because the CPI report came out. We have had an increase of 1% from April to May, which also correlates to, I believe it was an 8.6% year-to-date increase on the CPI. So really not good. You can see because of this, Bitcoin's been capitulating, stock market's been capitulating, all of the altcoins have been getting wrecked, and in my opinion, we need to look for lower price targets now. So I talked about this before, but this green accumulation range is really all we've got, and there's really not a plethora of data traded within here. You can see if we hop over to the 4-hourly time frame, this is just a brief accumulation range before we went for some massive run up. This was when all the move to earns were having a lot of hype. Since then, we've obviously capitulated. We flipped bearish at $3.46. If you go back to my videos on the 3rd of May, I was talking about the 4-hourly EMA flip. And we've been sitting on the sidelines since then. We've been going down. 786 was technically your last line in the sand in terms of the Fibonacci's, and that is long gone. So in my opinion, we are coming down to the start of this range, but more specifically, I think we are going to be breaking down. Now, there's a few different trend lines I do notice here, whether you want to draw it like this, which is a little bit more extreme, or like this, which I personally would prefer. You've got touch points here, touch points here, touch points all over here, and touch points all throughout here. And you can really see, with this, we snap below it and then flip right back above it. But with this, we held it every time, trended sideways on it, had multiple closes, and now we're propelling massively to the downside from it. So in my opinion, this was the trend line to watch. More specifically, I'm not the biggest fan of trend lines on my channel. If you already watch my channel, you know that I much prefer to focus on moving averages and Fibonacci's. This is kind of how I run my channel. But that being said, we've propelled below the last lines in the sand. We're below all the fibs. We're below all the moving averages. EMA ribbons, which in and of themselves are just a plethora of moving averages anyway, but the 13 EMA is what I'm referring to. And there's nothing left apart from the start of this range. So 90 cent, we are, in my opinion, obviously coming right down to 90 cent. But this is not my prediction because this is only a 2.8% move. What I'm actually predicting from here is to continue with the dump that I initially predicted all the way back here. On the 18th of May, I was predicting a 62% drop. Since then, we have dropped approximately 37%, which is very nice. We're more than halfway down on the trade. Nonetheless, we have about another 40% to go from the price that we are at this moment in time. That is basically all I've got for the USD pair. The only other things I would like to mention is volume is starting to increase, which is not a good sign. Once you're breaking below these major levels of support, you'd want to see bulls start to step in the market to rise the price back up. But what are we seeing instead? We're seeing, in the past 12 hours, 16 hours or so, volume in favor of the bears exponentially increasing. So, this breakdown was basically your last line in the sand. Squeeze mom on the 4-hour has started to flip to the downside, and on the daily time frame, wow, we've already flipped to the downside on the squeeze mom, which is a really bearish sign. So like I said, keeping it super simple, I think we're moving all the way back down to the bottom of this accumulation range at 55 cent. Am I saying that we should be buying the dip there? Am I saying that I'm going to be buying there because I think that's the absolute bottom? That's no, that's not what I'm saying. At this moment in time, I think we are coming down to 55 cent. When we do come down to 55 cent, we will have to reevaluate the market. There's going to be a lot of important dates coming up in the next week or two. For example, In the next 5 days, on the 15th, we're going to have the FOMC meeting, and they're going to be talking about the interest rates. If, once again, they do increase the interest rates, then I imagine the price is massively going to capitulate. On the 4th of May is when they previously increased the interest rates, and you can see, let's go back and find it. 4th of May right here. What happened the day after? Massive capitulation. Since the last FOMC meeting, we're currently sitting about 72% down. Do I think we're going to go down another 72%? Not necessarily. Not necessarily. I wouldn't be surprised if we do come down to the macro 1.618 before we do find you know, a macro bottom. But at this moment in time, another 74% drop is not what I'm predicting. I would like to come down to the 56 cent. Once we're back down, you know, around this range, around about 60 to 50 cent, I will be updating. I will be letting you know. I'll be talking about when we're closer to 56 cent. Do I believe we're going to hold it? Do I believe we're going to capitulate below it? Obviously, I don't have a crystal ball. I run on what the markets tell me, and at this moment in time, the markets are telling me we are coming down to 56 cent. That is my macro prediction at this moment in time. That is what I foresee going over on the USD pair. Really not looking good. Everything, all EMA ribbons, which once again are moving averages. The moving averages, all of your macro Fibonacci's, micro Fibonacci's, macro trend lines, micro trend lines, it's all gone. So you know, technically speaking, yes, you still got the lows down here. This is your horizontal trend line at 81 cent. I don't think it's going to hold though. That's just my opinion. I would also like to highlight we do have a massive M pattern potentially playing out right now. I don't necessarily think the price target would hit. I think, let's see where the price target of this would be. So the price target is in the minuses, so it's obviously not going to get hit. You know, I'm not saying that we're going to go to zero. I'm not saying that we're going to go to minus price targets. Oh no, this is from the breakdown. No, once again, this is going to be in the minuses once we break down. So I'm not focused on the price target of this, but nonetheless, just because the price target wouldn't be valid does not mean that this bearish M pattern breakdown is not valid. It is 100% valid, and it's definitely not good what we're seeing. That's all I've got for the USD pair. Let's hop into the BTC pair now. Bear in mind, for the past couple of weeks, we were able to predict this move to the downside because of the BTC pair. The BTC pair was being a leading indicator of what we were seeing over on GMT USD. Now, yes, they pretty much move in tandem. However, there are times where GMT BTC looks like it wanted to break down before the USD pair, and that is because when we come over to the Bitcoin dominance has been rallying like crazy. So in the past video, I was predicting this 60% drop against Bitcoin for green Metaverse token. We're down 22%, meaning that from where we are at this moment in time, another 49% drop is currently what I'm predicting. We haven't had a daily flip over to the bearish side of things. However, I do think we are going to start seeing bearish flips once we do start capitulating back down below 90 cent. Let's check the 4 hour. The bulls are still, well, they're technically in control. However, you know, we are losing momentum, and this is shifting over to a bearish trend. You know, when we hop over to these dark green candles, it means we're about to shift over to the squeeze bomb. This is our momentum indicator, and we are going to shift over back into the light red. We are going to start another downtrend once again, wrapping up GMT BTC. Just like the USD pair, we are seeing an increase in bearish volume. And if we look here, we actually had a massive spike in volume. And we really didn't have that big of a spike in volume over on the USD pair. So this is, like I said, sometimes the BTC pair becomes much more bearish than the USD pair. For example, this was for 8, 12, approximately 15 hours ago. It would be 16, but this is going to be wrapped up in the next hour or so. So 15 hours ago, the GMT BTC pair was telling us bearish engulfing candle, following up with bearish volume. We're probably going to break down. And what do you know? Within the past 4 hours, the macro capitulation. Why I say macro capitulation? We don't have much data traded on GMT UST. This is as macro as it gets. But you know, mid to macro term, the capitulation has started on the USD pair. So with all of that said, wrapping up the video, GMT USD in my opinion is coming all the way down to 55. Actually, it's sitting more around 56 cent. Let's just call it 55 cent. It really doesn't matter too much. But this is, you know, like I said, we were predicting 62% drop. it's now about another 40% to the downside, which is great. GMT, BTC, still another 49% to go, and it does make sense that this is going to drop a lot harder against BTC than anything else. I mean, obviously USD pair is probably going to go down a lot harder, but what I mean by that is I'm much more focused on looking at how these altcoins are performing against Bitcoin, because in my opinion, we're clearly in a bear market. I've been saying this for the past month, and I've been bearish on GMT for quite some time now. You know, we were riding this trend up. If you were a veteran to my channel, we literally got in, you know, where this started trading down here. By the time we sold, I can't remember the exact flip, but we literally made a 1000x trade on this from the lows up to the highs. Okay, so on GMT, we got in literally somewhere down here, and we sold once the 4-hourly EMA ribbons flip bearish. So, you know, I'm not a perma bear on this. I'm simply looking at the chart objectively. The chart is currently in a downtrend. The downtrend is currently defined by the 4-hourly EMA ribbons. Every time we come into the 4-hourly EMA ribbons, we lollygag for a bit, and then we have the next leg down. You can see lollygag, breakdown, lollygag, breakdown, lollygag, breakdown, lollygag, and now we're having the next breakdown. So it seems pretty black and white to me. Once again, I am not a perma bear. I'm not going to be bearish on GMT forever. However, I am going to be bearish until we have a trend reversal. Once we have a trend reversal, I will be looking at making a trade on this. I will be looking at longing this or buying it on a spot position. But until we see these bullish signs, until we see a macro inverse head and shoulder or a macro W, you know, once we come down to these lower prices, showing us that we are about to have a reversal, until we start flipping above the 13 EMA, the 4-hourly EMA ribbons, the daily EMA ribbons, then the trend is your friend, and the trend is your friend until the end. So what I've got for you today, as always, not financial advice. Cowboy out. Peace.